The stock market staged a rebound on Friday following the huge losses in the prior session. The Dow closed up 477 points after rising more than 800 points in the morning. The S&P 500 and the Nasdaq were also higher on Friday. Thursday's losses seemed to come from fears about an increase in coronavirus cases and a more subdued economic outlook from the Federal Reserve, which forced investors to confront risks that had been pushed aside during the huge market rally from the March low. Consumer sentiment fell off a cliff in April, but has begun to regain some ground since then. In other news, Hertz has achieved bankruptcy court approval to sell, or at least try to sell, up to $1 billion of worthless stock to maniac teenage day traders. Mind you, the decision from the court came a few days after the New York Stock Exchange started proceedings to delist bankrupt Hertz stock. Also today, former Enron officials are wondering why they didn't think of that. Oh, it hurts so bad. So, how do the charts look today? And today we're going to look at one chart, which is the 2-year weekly on the diamonds, the DIA, and that's the Spiders Dow Jones Industrial Average ETF. And the close on Friday was 256.74. From the price chart, the bottom there, and then the top here, excluding this upper portion, it looks like the potential beginnings of a topping process, maybe precursor to a contraction. Don't quite know yet, but that's a possibility, especially with the VIX that's in the mid 30s right now after its minor explosion earlier this week. I told you about that multiple times. Got to watch out because that can cause problems, and it looks like it did, at least for Thursday. But it's still in the upper 30s, so that means we got to be careful going into next week's trading. Moving on down here into the volume, you can see that from the March lows, the volume has tapered off as we've gone up. So that's another cautionary tale. Moving down here into the MAC, you can see that nice rebound here. The move on up and through the slow line up to this point here, but we're still at a negative 3.753 on the fast line, a negative 7.24 on the slow line. So there's still a ways from that zero line, which means it's gaining strength, but it still is in a weakened condition. Moving here into the histogram, you can see maybe the beginnings of a topping process that I talked about earlier with the price chart. Moving down here into the price rate of change, that does look good, reaching toward that zero level as well. The slow line's heading on up, still has a ways to go, but the fact that it's reaching up to that zero level is good news. Here into the relative strength, you can see that it has popped above that midline and it's staying up there, at least for now. But can this be the beginnings of a topping process? Well, not quite sure yet, but just be cautious. Into the stochastic, that looks fine with the nice bottoming process to move on up above that midline or 50 line and reaching up towards that overbought condition. Not quite there yet, so hopefully it can move on up there. If it does, that would be good news, but perhaps it won't. Looking at the Williams, we can see that the Williams did move into the overbought condition there, but it headed on down here in the last couple of days or so. So maybe this is a beginning of a topping process, perhaps maybe just some sawtoothing that perhaps can occur here. So we're really in the early stages of the signs that are indicating maybe a topping process, but we'll just have to keep an eye on that. For now, things look fairly decent, at least for now. Moving on up here back to the price chart, one last look. So we're up here and we're tangling with the 20 and the 50 EMAs, and oftentimes the market gets stuck in this area for a while. So that simply could be the problem as opposed to maybe the beginnings of a topping process, but something we got to be mindful of. And for today, that's ChewDog Charts. Thank you.